Hello and welcome to this Wednesday edition of FreightWaves Now. I'm your host Anthony Smith, and today I'll be teaming up with Kevin Hill. He's going to come up soon with a carrier update brought to you by PowerFleet, and soon after we'll have a shipper Econ update with the two of us teaming up on the latest in manufacturing. Stay tuned. Welcome to your carrier update brought to you by PowerFleet. I'm here with the man himself, Kevin Hill. Kevin, what's the latest?
The latest is the hurricane going up the East Coast, Isaias. I think that's how you pronounce it in Spanish. I just looked it up, so hopefully it is, but I'm going to keep on saying Isaias no matter what. What we can see here on critical events, it's going up. It landed yesterday night in North Carolina, South Carolina, North Carolina border. It's moving up. You have like these intense winds all up, Philly, DC, Baltimore, up to New York, to Connecticut. Brian Strait, who writes for us here at FreightWaves, is without power now up in Connecticut, just north of New York City. So you have these 60, 70 mile an hour winds knocking out power, causing disruptions. And what happens when there are disruptions? Volatility, right?
That's right.
So we have volatility, and we can see that on our map here. We can see the East Coast right through here. Volatility is spiking up, tender rejections. There's a lot of disruption because of the weather. This will hold for probably the rest of the week. I think a lot of electricity won't be back on until maybe early next week. So you're going to see a lot of disruptions, which causes volatility, which are good opportunities for carriers who want to go into these areas and where the storm struck through here as well. And we can see the volatility here on the maps, on the table, I should say. You have the West Coast. West Coast is humming along very well. Allentown, PA, which is in the storm. Elizabeth, New Jersey, as well. So you have some really good volatility or rejections coming up, which means stronger rates, stronger demand. Way to go. So, and then we have Baltimore, specific outbound tender rejection here. You can see it spike late last week. Is now up to 20% from what was it? It's almost doubled, like 40% increase over last week. So there's a lot of opportunities in the Northeast because of the volatility, and there's always really good opportunities all throughout the country, though, right now, because we're at record levels on freight volumes. And as you can see here, we have in the green, we have 2018, in the orange, 2019, of course, in the blue, we have 2020. We're well above this peak that we hit in late March, whenever the pandemic and the shutdown orders and the rush to essentials goods, consumables came in. We are even above that. It looks like we might be peaking a little bit, though. We'll have to wait and see on that. But you can see right there, flat lines right in the last few days. So we'll have to see over the next few weeks exactly how we proceed from there. But yeah, and this chart kind of shows the same, more on the rejection or the capacity. We see all these lines here, which are DAT rates for different lanes across the country. Here we have the national tender rejection rate from Sonar, of course, and it's 21.48%. So if you look back in 2018, you had a lot of tender rejection rates in the mid-20s. Very strong market there. We're getting up to that point right now. So all exciting stuff.
And Kevin, early on we saw that disruptions, of course, on the carrier side, that's going to mean higher rates, potential disruptions in the lead time?
Yes,
possibly?
Yeah, disruptions in lead time, disruptions in certainly rates, so rates are going to go higher. Lead times are probably going to shrink to get trucks in, or they might expand too. That is the thing with lead times.
So much volatility.
I know, right? In lead times, they might not be able to get the capacity in, so lead times will go out and orders will get delayed. For those orders or those shipments that really need to get out, then they'll compress.
Excellent. Kevin, thanks so much for that update, and thank you so much for tuning in. That's going to do it for this carrier update brought to you by PowerFleet. Stay tuned for all the latest.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Hello and welcome to your Shipper Econ Update. I'm your host and lead economist Anthony Smith, and I'm back here with Kevin Hill. And today we're going to go over the latest trends in manufacturing. Pulled up right here, we have the Institute of Supply Management's PMI, the Purchasing Managers Index, in purple, and in the green line, Kevin, we have the flatbed outbound tender rejection. And in the latest number, we saw that there was an increase to 54.2, and that is a consecutive rise for the Purchasing Managers Index and shows some expansion within the industry. One of the things to take away here, even though we're seeing some upward movement, some consecutive upward movement in the PMI, is that this is a diffusion index, and so it doesn't necessarily mean that it's at a 15-month high for manufacturing overall, but this is the highest level that we've seen for the PMI. So it's just increasing over the previous month, right, Kevin?
You're exactly right. So it doesn't give us an idea of absolute levels. Are we back to 2019? You know, that absolute number of manufacturing or sentiment. But directionally, it's really good news. Flatbeds have been struggling all year. As we see, 5.89%. It bounced up to in double digits briefly because of the last month's survey, or not because of that, but in tandem with it, I should say. But 5.89%, we're looking at van tender rejections 4 times that amount. Right. It crossed over 20%, 21, 22% right now. So as you know, that number tells me right there that manufacturing certainly isn't to the levels it was a year ago.
Right, and as you mentioned, in tandem with our flatbed outbound tender rejection index, we have some downward movement as of late as we're going through the current month, and so it kind of shows or hints towards maybe some decline in manufacturing. Of course, manufacturing equipment isn't the only commodity that moves on flatbed. We also have construction materials, but specifically when we're looking at manufacturing, this has, it looks like there might be some downward movement coming in the next month's report.
It does. If we have the same correlation we've seen in the past and the same correlation we should see in the future, it's going to get rough for flatbed operators over the coming weeks.
Right, and as always, we have to look at multiple viewpoints, and one of the areas that they have in the next chart here is, of course, the new orders component, one of my favorite aspects of it because it's indicative of future production. And so we're looking at the new orders component. We have a reading of 61.5, and that is telling us that there is some active new orders that are coming in. Producers are feeling a little bit more confident about production coming on down the line. But as always, with everything as of late since March 2020, there's a lot of volatility, and that's going to be built around COVID-19. Of course, that's going to be the main predictor and what's going on in the economy. And so some of our trusty leading indicators aren't as leading just because the virus is going to really kind of dictate the trend for a lot of indices.
It really is, but that 61.5 is very bullish. It's very bullish. Maybe it'll self-correct, or not self-correct, but it'll lead to a higher number in those flatbed tender rejections coming out. So maybe it's not so much so bearish as the last slide, but it gives us a little bit of optimistic hope out there that they'll bounce back a little bit.
Exactly, and some of the things that the producers and the purchasing managers within the survey said that they are cautiously optimistic. So even those that are on the front lines when we're looking at these trends aren't quite excited or fully sold on that things are back to the normal just yet. And I think even when we're looking at employment levels, they are still well below that 50 threshold. So looking at the ISM Manufacturing's Employment Index, it's at a 44.3, so showing that this is still under that 50 threshold. So it's showing that there's still a decline within employment. And I think that kind of ties to some of the headwinds that will be plaguing manufacturing overall, right? So we're seeing COVID spikes in certain states, and certain states that are going to be really impactful for manufacturing. That's going to limit the amount of workers that can come back to work and entail also impact production.
And we talk about uncertainty, and that goes straight to capital expenditures, CapEx budgets, where we're seeing that that's limited right now because of uncertainty. And as long as you have uncertainty, you're not going to have those outlays of expansion, of true expansion on an absolute level. And employment is going to be shaky. The new initial jobless claims comes out tomorrow, along with the continued. Last week was the first week of an increase since May in that, so it'll be interesting to see that. We'll cover that on the midday market update. tomorrow and Thursday.
Excellent, Kevin. Thanks so much for joining me today, and thanks so much for tuning in. That's going to do for the shipper update, and that's also going to do for this Wednesday edition of FreightWaves Now. The content doesn't stop here. As always, you can check us out on all your favorite streaming platforms, including Apple TV. Thanks so much for tuning in, and we'll see you on the next episode.